Let's welcome on board Vishal Thakkar. He's the Deputy Chief Financial Officer at Anupam Rasayan. Hi, thank you so much for waiting by, Vishal. Appreciate you joining us today. Well, the FY23 was quite solid for you, a growth of almost 50% on the top line, EBITDA at 27% in terms of the margin, and EBITDA, growing by 41% on a year-on-year basis. Going forward, what's the outlook for FY24? What kind of growth rate should we envisage?
Hi, Anisha. First, thank you for getting us on your channel. Yes, the year has been very good. And if you look at the backdrop that we are in terms of the economic environment and the supply chain disruptions, I think we can take a bit of a pride in that we have been able to deliver a very robust and a consistent performance of our numbers. And yeah, we are happy here. In terms of going forward, we believe that we should be able to continue the growth journey as what we have been indicating in the past as well. Whatever has been our historical growth rate, we should be able to see and deliver that, maintaining our margins. And if you look at from a kind of LOIs and the contracts and the kind of customer conversations that we have been having, we believe that those numbers look quite achievable from our perspective.
Right, Mr. Thakkar, good afternoon, and this is Vinny joining in the conversation as well. I'm going to touch upon that LOI point that you said. You all have signed a lot of LOIs recently. That's also from a lot of American MNCs that have come in there. So when you just talk about your US contribution, currently it's negligible. But going forward, how do you see the contributions coming in from the US market? What should we be expecting in terms from share over there, and any more that you're expecting in terms of LOIs coming in?
That's a good one. We have been seeing quite a bit of attraction across Japan, Europe, and Americas. And you're right that America, we recently announced a contract from an American client as well. We believe LOI, sorry. And as we go forward, we see that interest from that geography is going to expand. Our America is around a 1 to 2 percentage point in terms of our revenue contribution. We believe that should expand as we go. It will take its bit of a time because, as you know, that in our business, the ramp up takes its own time. But yeah, over a period of time, we should be able to see some interesting numbers coming from there as well. So across the board, be it Japan, Europe, or America, all three will grow, and America will start contributing larger in this case as well.
Just wanted to come back to the point that you were making in the first answer, because you talked about the growth rate sustaining and, a bit of a northward bias when it comes to the margins as well. So given the fact you grew at 50% pace in FY23, is that achievable in FY24 as well, given the base effect and margins of 27 to 28%?
How I wish I could have said that I could have done a CAGR of that number. Not that I'm indicating any of that. But if you look at historical, we have grown at 25 to 30% revenue growth in terms of our historical numbers, which is what I'm indicating that we should be looking at maintaining that number. Yeah, in terms of EBITDA margin, as we have been consistently saying, 26 to 28%. That I think we should be able to hold, and probably as we go, we can guide better. That can be better or not, but at least 26 to 28 is what we'll be able to deliver in any case. So all in all, good to see growth on our historical performances. Will continue that way. Not this year, because this is one large jump which we don't expect to go continue that over the next 3 to 5 years. But 25 to 30 is what we will look at.
Yeah, no, that's why, Vishal, I got excited when you said the growth rate is likely to continue. I said 50% CAGR sounds very exciting. But nonetheless, 25-30% is something also that you can pretty much ride home about as well. With respect to the CAPEX plan that you have in mind, could you talk to us about when the Gujarat facility is coming on board and any other large CAPEX that you have planned for yourself?
So if you see historically, in last 5 years, we did around 1,000 odd crores of CAPEX. And as we go forward, we have announced another 670 odd crores of CAPEX, which would be done in 12 to 15 months time period from now on. So, and these are 3 facilities. So each one will come in a staggered manner. Probably one may come a quarter early, another one may come later. But that's what we are talking about. 12 to 15 months is the time period. And current capacity gives me a growth potential for next 1 to 2 years. And then the new capacity allows me to continue that growth because of the new capacity that we add here. So in all, we are fairly in terms of streamline, in terms of capacity coming on stream and the demand available and the revenue projections that we are putting for ourselves.
Okay, Vishal, we let you go on that note. Really appreciate you joining us. So, the margins are going to be maintainable, 25 to 30% growth. The outlook for exports in American geography looks quite strong. So that's something to, which is looking well for the company at this point of time. But